Trust, and taking care of all secretarial complaints with regard to Minister of Corporate Affairs. As a company, you're supposed to do lots of communication, with the Register of Companies, and we take care of the entire secretarial matters, like connecting your board meetings and annual general meetings and taking care of the paperwork for the same and kind of thing. We also do trademark, patent, and copyright registration, the IPR, what they call as intellectual property, right from registration to taking all disputes and legal issues which are arising on corporate. So basically, it's a service of a chartered accountant, a company secretary, and a corporate lawyer. So since we have a wide exposure on all such areas, if we sit with the client, to understand their problems, anything from their company startup till the income tax assessment level, we'll be able to address their queries. Instead of usually when you go to an auditor, if you ask about something related to secretary, he might be knowing something, but since he is not his cup of tea, he would not advise it to the right sense. He might as well direct you to someone else. Likewise, if you go to a company secretary, if you go to a lawyer, he will talk only about the legal aspects of anything. So we, since we got the exposure on all such areas, we advise from A to Z. We know the complete cycle of what could happen in a company if they don't do things in the right sense. So we have served more than 1,000 clients since our inception, and startups, 90% startups, and we have big companies also, which are basically outsource, one or two activities like internal audit and professional tax thing, kind of. So small things also we do for large corporates. So this meeting, Salma told me that there might be lots of questions in the minds of wannabe entrepreneurs just started up and people who are at small size in the areas of taxation, legalities, company law, and all that. So which we could address as that's the whole purpose of inviting me here, and I'm very happy to see all of you. All your questions will be addressed, that's for sure. So when you move out of this meeting, I believe to a certain extent I'll do my best.
But we'll make sure we won't leave you after the meeting.
Oh, definitely,
also.
that's definitely. That's my profession. So
and I just want to ask if everyone's okay, can we cover a little bit of trademark also? Because that's what you do.
Definitely.
What do you think, members? I think we'll cover a little bit of trademark questions.
Yes.
And
see, anything you asked about anything that you have just defined, I'm okay with it. So let's not restrict to any particular topic. So since we have a good number of time together. So see, normally what happens, when someone wants to start a business, when they come to us, we sit with them, and we basically understand what exactly the business that they want to do. So understanding of the business, not only by the promoters, it's also by the person who's going to execute for you is very important. Then only the guidance can happen in the right sense. Earlier, when someone has a problem, they tend to fight for a solution. But today the problem is we have lots of options. So people get confused, which is the right option to choose for when it comes to a company setup. So first thing, we understand the business of our clients who want to start a business, and we advise them what is the right status of the entity. The options what we're talking about is a sole proprietary concern. If you say that I'm the only person, I do the entire show. Of course, you can have assistants, you can have employees and kind of thing, but you don't want any other person to co-own the company, to co-own the business. So you can run it as a sole proprietary concern for long. I can quote examples of lots of sole proprietary concern which has been running for years, for ages, I could say. So it's not that a sole proprietary concern has a short life. It's not that. You can run it for ages. Till the time you feel the pinch that it has to be converted into such other form of entity. I'll come to that. The other form is a partnership form. Suppose two friends, they want to start something small, because people normally think that I don't want to invest heavily when I start up. Every penny counts for me. I don't want to shell out huge money kind of thing. So people would as well think of a partnership form. The registration is very simple. For sole proprietorship concern, actually there is no registration. You can fix up a name and you can start a business. There are certain registrations which are required for the operation, like service tax or VAT kind of thing. For the entity, there is no registration, mandatory. So for a firm, you will have to create a deed, a simple contract between among the partners, basically, to talk about what business you are going to do and what are the terms and conditions that you agree between them partners kind of thing. Like I said, partnership firms also, there are lots of firms which are there for about more than 20 years or 25 years or so. There are no legal complaints. Heavy legal complaints has a place for other form of like a private limited company or public limited company. So partnership firm is another simple status of entity where you could think of running a company, running a business under the same. And the third form, which is the company. So again, there are many types of companies. So majority of the people are private limited company. So private limited company is again more than one person joining together, calling themselves as shareholders, promoters, directors, first subscribes to them, any name. There are lots of names available. So you can incorporate a company with the register of companies coming under the Minister of Corporate Affairs, where a minimum share capital is 1 lakh. That's just a statutory minimum. You put the money in, you start the company, and then you run the show. And that's a private limited company which restricts the number of members to 200. It was 50 till 31st March. The new Companies Act 2013 has made it to 200. So as you believe that there's a concept of crowdfunding. In order to encourage people to go for crowdfunding model, they have increased the base number of members from 50 to 200. So if you want to start a company with about say 200 shareholders, you can still do now, which is a new concept. So crowdfunding can be actually legally encouraged now. So through this model. That's a private limited company. So anything beyond this number, and if you want to go to public for issuing shares to the, I think beyond the minimum of 200, and if you want to invite deposits from the public, public deposits, fixed deposit. So for which you have the public limited company model. And the new law, the Companies Act has been talking about OPC, one-person company. Like I've come across many clients of mine saying that I'm the only person, okay, I want to run the show, but I don't want to do it as a sole proprietorship concern. I want it to be structured. I want to see that it's a company, but at the same time I don't want to have any a co-founder or a co-promoter. So for addressing this kind of a thing, there is a hybrid system of running a company has been introduced into the Companies Act in 2013, which is effective from 1st April this year, whereby you could have a one-man company without having any shareholder apart from you. This is a one-member company. So about the OPC, we can talk a lot. So I can address your questions in case you know. So I will run through a few things which talks about OPC. OPC is a one-person company, as the name says, and there's only one member. There's only one director, which is a bare minimum. You can have up to 15 directors if you want, but shareholder can be only one. Okay. And the process of registration is also very simple. You can start the company with one. You can have employees. So I'm talking about only the directors and the shareholders of the company. And there are many exceptions. We call it as advantages. The normal procedures which are applicable for a private limited company have been granted exemption for OPC. Like, you don't have to conduct a board meeting. If you are the only director, we cannot talk to yourself sitting in a conference room. So there is no board meeting. You don't have to call for a board meeting. There is no annual general meeting. You don't have to issue a notice. When there is no meeting, then you don't have to issue a notice for the same. Likewise, there are many advantages. What they say that you can make it simpler at the same time. Call yourself as a company. Only thing is, wherever you mention your name of the company, you'll have to mention beneath that OPC, it's a one-person company, just to indicate the public that it is run by only one person. So this is a brief discussion about it.
Can an OPC be converted into a private company?
Excellent questions. An OPC can be converted into a company under a certain condition. Like if your paid-up share capital crosses 50 lakhs, or if your turnover, average turnover crosses 2 crores, you can convert your company into the OPC into a private company.
So has it got any advantage compared to the sole proprietorship?
Yes, of course. See, if you get an investor, and if you want to have the shareholding, shares to be allotted, and you want the ownership to be shared with the person, under the OPC, either you have to put your own money. Suppose you are getting an investor and you don't have the option of converting into the private limited company. It's better to start it as a private limited company right from the beginning. Instead of starting as a sole proprietorship or as an OPC, then going to do a for conversion, where you will have to invite another person, but the law does not say that you will have to get another person to invest. The paid-up share capital, because you are the only shareholder, where the OPC is happening. So, pardon? Liability is also limited by shares or by guarantee. There are few terms we use it as. Your liability is limited in OPC. According to the
if I'm running the show, okay, so suggest me sole proprietorship or OPC?
It again.
Which one you suggest
yes,
and why?
Yes. It depends on your requirement. Point about. See, you can run it as a sole proprietorship company itself, provided you are not going to look for funding from outside, and you think that you are recognized everywhere. So one another point I want to tell you is when you go to a bigger company for signing up a contract, they might not sign up a contract with you, saying a reason that you are one person.
So this OPC will have this director
OPC,
numbers, everything.
yes, you like. So OPC, there is an assurance.
So we need to register some.
Minister of Corporate Affairs, you are
So
officially
you need to change the profile
profile. This is what it is.
from sole proprietorship to.
Yes. It's a company. It's a company where you establish yourself as a one-person company.
So does the existing things change like tin, that?
No, if it's a conversion, like from the sole proprietorship concern to OPC, ownership conversion can be done. Where you will have to approach the government authority and say that the
Same,
We
right?
need to change the
Can
PIN number
I
and
request
other-
one thing, members? For the systematic thing, you could make notes of your questions. Let him finish the complete talk so that he's able to cover everything what he's planning to say, and then we could take the questions. I would
Anyway,
prefer
I got
that.
your point anyway, so
Yeah.
we will discuss. So
Just make a note of the questions, absolutely, because let us cover the whole thing, because this way we'll just be in one segment of the talk.
So this one-person company gives such benefits for people. So other things, public limited company, that just we discuss. So these are the normal forms of options available for someone who wants to start a business. And for you to decide which is the right form of registration has a detailed understanding and discussion. So suppose if you are sitting with your auditor, you will have to openly tell them this is what I intend to do. Like say for example, I don't want any external investment. I can run the entire show out of my own funding. Okay, which is normally not the case with most of the guys. So you have to tell clearly that how does it happen, because I have seen many entrepreneurs who run the show entirely out of their own funds. So further they say that I don't want to have any complications of conducting AGM if I'm a private limited company. I don't want to go through a compulsory audit which is applicable for a private limited company. All the things they want to avoid the things. So they said I want to run it as a sole proprietorship concern itself if it's an individual. Many people say that no, we are two, and at the same time we don't want to shell out huge money on setting up as a private limited company. Let us go it as a partnership firm itself. Again, that's also fine. So basically, you have to tell your requirement to the advisor, and then only you'll get the right advice about how we can structure the business formation. Okay, and this basically talk about the right form of entity that you can choose when it comes to the company formation. And the next, you can have your doubts registered in your mind for now, and we will address it after the. And the next thing what I want to cover about is the expenses that you incur, okay, for the business before you actually start up. Like I have a few people here who are going to start a business. See what happens whenever we register a company and we ask our clients to give the inputs about what are expenses that you have incurred, income you have made, and bank statements for the accounting and auditing purposes. They say that no, I get to start my operation, so I don't have anything to share. Then we ask them, say, how about expenses? See, you can say that I have not made any income, but how about the expenses? He said, yeah, I've incurred a lot, but since the operation is not started yet, I don't think I can basically show you those things. Then we said the Income Tax Act legally permits an entrepreneur to book all the expenses that he incurs, okay, before the operation. In fact, before incorporation also, you could have incurred many expenses. Like I could throw an example of, suppose if you're planning to start a company, start a business, and you'll be incurring lots of expenses like traveling. You'll be going and meeting many people. The hotel food expenses. You might be attending events and other places where you pay the participation fee. All such things you can list down, and you could say that these are the expenses which I incurred for the new company, which I'm going to incorporate. Because for the company only I'm incorporating. Likewise, the incorporation expenses also, like you'll be paying some fee to the government, okay, for starting a business if it's a private company. You'll be incurring a professional charges to an auditor or to a corporate law advisor and all that. So all such things you can list down, and you can show as the expenses incurred pre-incorporation and pre-operation in your books, which is going to help on tax saving, okay, in the future whenever you make profits. And this is legally allowed. And suppose if the amount is substantial, so suppose if you incur a pre-operative expenses, which runs to say about 10 lakh rupees, you cannot book the entire 10 lakhs in the same year. There is a provision which says that you will have to equate it over a period of next 5 years, so that the burden is not the tax claim with the government department is not huge. So normally people defer it over a period of say 10 years, or no, sorry, 5 years, equated, which basically means that how it's going to help you on tax. Like that's a question. Suppose if you incur say about 2 lakh of rupees, as your expenditure, before you actually commence the operation, you have incorporated a company and you have been spending money towards your operational thing, but you are ready to make income. So those expenses when you book it, so these things get accumulated as your losses in the books. And when you file your income tax return with the government department, with the IT department, you say that these were the expenses which I incurred, but since I did not make any income in my business, I'm showing this as my loss. So which I'm carrying it forward to the next financial year. And when you make profits in the next financial year, after you officially commence the operation, whatever profits you make, you can offset against these losses which is been carried forward, and you save tax in the next year. Suppose if still you have more losses. Now I've seen companies which have got carried forward losses for about 7-8 years and also. So because they would have incurred huge in the first year. So those things though you can keep on, the IT department says up to 8 years you could carry it forward, but still you can carry it year on year, so and you will keep on saving taxes. So all such things are needed is you have to book your expenditure in the first year itself. And likewise every year whatever expenses that you incur, if you properly book it in your books of accounts, that will save you in the future when you make profits. So people who are just started or about to start up, you'll have to list down all your expenses, properly support with evidence. You cannot say that I've just incurred so much I don't have any evidence to say. Wherever bills have to be supported, it has to be supported. Because there is something called a scrutiny from the income tax department. After you set up a business and they do about 2% of the actual income tax returns being filed. There's a computer automated program in the IT department. So they randomly pick some companies for scrutiny. Scrutiny means they will issue a notice saying that you bring all your books to my office on this particular day for this year. So, but of course they will ask for about a few years prior to that particular day. So where you'll have to take all such things to the IT officer. When they assess the books, if he finds that you have booked many expenses without proper supportings, so the officer has the right to disallow, and they will make you to pay taxes for the amount whatever he disallows, which will be about 30% plus interest on penalty and damage. So every expenditure that you incur, it has to be properly supported with documents, either during the incorporation stage, even on the regular running stage itself. So that is on the pre-incorporation stage where you can take. Apart from this, there are lots of ways where you could save your taxes legally, as the provisions are allowed in the income tax department. There are many areas where you could save taxes. For which the understanding of your business and the applicability of the legal provisions has to be understood, which I believe will be too advanced thing for a person who does not have a finance background. But you will have to regularly interact with your auditor to say that this is what my operation is and this is what my actual income tax liability is, how I can save taxes. By looking at your business setup and also the kind of income what you generate and the expenses what you incur, the auditor will be in the right position to advise you what are the ways and means where you could save taxes. There are legal provisions also for the legal department. Since it is a little bit of specific in nature, giving an example to you would be a little difficult. But in case you have any questions talking about your own business, I can address it to the point. So that is on the tax saving law where you don't have to really worry about, I don't want to pay. So most of my clients used to say, I never want to pay tax. So when it comes to, and for tax also, people, if you say that suddenly you have to pay 1 lakh to a government, or maybe 5 lakhs to a government department, you might feel it, a pinch. Take that I cannot shell out so much of money. That's a concept called advance tax. So when the financial year is started, say April, you will have to project how much net profits you are going to make for the entire financial year. Divided by 4. So in each quarter you will have to pay 20% as the advance tax. Not paying advance tax also is penalized with the interest at the rate of 1% per month by the IT department in case they find you. So you will have to equate your tax liability over a period of 4 installments. Or 4 installments in the financial year. So advance tax concept is for which you will have to do advance planning. So sometime in April you will have to project how much you are going to make. You can ask me a logical question how we can project. Of course, a logical assumption has to be applied. In case you think that I am going to incur a loss, not a problem. If you are going to incur a loss, there is no tax liability as such. Suppose if you are making profits and you think that I am making profits and let me catch my auditor to get an advice. And whatever tax that you are going to trying to save, that is fine. But suppose if your actual tax liability for the entire financial is more than 10,000 rupees, advance tax is applicable. Any business. If from your business, if there is a net profit that you earn out of your business, any business, there is an advance tax concept in case your total tax liability is more than 10,000 rupees in a financial year. So which has to be paid over 4 installments in the financial year.
That's 4, it's not half a day.
It's 4. It's 4, yes. So that is April, May, June, July, August, September, 2 months. Yeah. So something like that you will have. So if you suppose there is a scrutiny part which I was talking about. In case the officer takes your books for scrutiny, they will see that okay, there is a tax liability actually for this company which is more than 10,000 rupees for the year, but you did not pay the advance tax. Something like just I told. So they will impose a penalty. They say that 1% per month you will have to pay, and they will charge interest on interest, and they will issue a notice to you. So this is when they take it for the scrutiny. So don't be assured that okay, out of the 2% of the total lot, I will not be selected kind of thing. I have interacted with lots of income tax officials, and they don't simply run through the automated system alone. They randomly pick companies also. So since they know that what because it's alphabetic order, so like one particular officer is assigned A, B, C, D, A to D. The companies which are having the first alphabet ranging from A to D, there will be one officer who will be taking care of those companies in the particular zone. So he might be aware of the total number of companies that he's been handling, okay, in that particular zone. So in the whole article we can also randomly pick, and he has been given powers by the income tax department. Income tax provisions give power to the person to pick any company for assessment. So something like that, if they pick your name, obviously even your auditor cannot help you. Your auditor will say you will have to pay because the mistake is on your side. So these are the small things, but at the same time it will also help you in terms of paying the whole lot of taxes at the end of the financial year. You can equate it over a bit of 4 terms, which will help you also in the cash flow management. So this is on the tax saving area, and there are other things like basic do's and don'ts for startups when it comes to legality part. Any business, normally when you want to start a business, I believe there are lots of wannabe entrepreneurs here. Can you tell me what is the first and foremost thing that you have to do in business? For a change, I'll ask you.
Open an Excel sheet and
Excel sheet and?
start that first.
Okay.
That's what I did first.
Okay, no. Before you start business,
Work out the basic business model.
Okay, fantastic.
We have to do basic groundwork.
Okay.
What we need,
Fantastic. Okay.
target audience.
Okay. So there is something called business plan. Many people, in fact, people who are in business also, normally they don't look at doing a business plan. See, business plan is not that you think of something and write it off. There are many templates available online also. When you take up that and start answering each and every question, you will come to know that you have ignored many parts, many important things that you will have to concentrate in your business. That will help you a lot. In fact, I did for my own business. Only after I started answering that, I covered about only 10%. I thought that I can get business easily, I can make huge money in this business and all that. But then I ignored many parts. I myself realized that only when I did the business plan, I understood, okay, there are many other things I totally missed out. That will help you a lot in terms of having a total understanding of your own business, the competitor analysis, who are all the competitors, your pricing strategy, and very important, the financial plan. Okay, so either you are going to put your own money, or it's a borrowed capital, whatever it is, and how are you going to take the money out, either for yourself or for repayment to the investors. For which the detailed financial plan, you have to project the numbers month on month, year on year, and you have to work out the expenses, what you're going to incur. When you work out the expenses, suddenly you'll think, oh, I never realized that I must do this. Because that's what the business plan templates help you. Like say, if you are dealing in materials, stock, okay, there's something, a concept called insurance. So suddenly there is a 5 people, they say, oh, I never thought there was an insurance. So you have to project in your financial plan that I need to insure my product, for it I need to reserve some amount for the premium payable. This is going to help you a lot. Suppose if you have a high-end cell phone or a laptop and suddenly you drop it off on the ground, right? The entire investment goes off. Okay, so for which you'll have to think about, okay, I should insure all my stock, like all my assets in the company. That will help me. Tax saving also on the different story. Because when you pay premium, you also get an insurance part, and also you use it for a business expenditure claim, which will reduce your tax liability to the government. So likewise, the plan, business plan is very, very essential for any business person. Suppose if you think that it's too advanced or it's beyond your capacity, you could engage consultants, for writing a business plan for you. But usually consultants, what they do, they sit with you. They take the inputs from you, and then only they prepare the business plan. But that will give you a complete picture of how the business can be done. Instead of assuming that, no, I can really do wonders and this is what I could do and all that. You need not limit yourself to such an extent. Once you start doing this, obviously it will give you a more elaborate picture of how this thing happens. So this business plan, many people tend to miss. Okay, I normally advise when you want to start a business, First to do your business plan. But business plan takes time. It will take about 30 days minimum, bare minimum, where you will have to analyze each of the, because there are certain points where it will ask you to go through the field study, what you just said. It will take about the 20-30 days solid for you to do the pre-level work to address one question. So something like that, it will give you much elaborate knowledge of your business. Okay. There is another thing which I think I can cover right away, which is the trademark thing for the business. Like suppose if you run a business, obviously there will be a trade name. Okay, there will be a brand name for your business. Registration of the brand. Okay, there is an intellectual property right. The regional office for 4 other states. That's where we need to submit our application for registering your brand. Okay, I'm currently handling many cases of my own clients where they did not do the registration of their brand name, and someone who started a business recently went and filed and got the ownership, and he sent the legal notice to my client saying that now I am the owner of this brand, you stop using this. And this case, I've invested heavily, on this business. I cannot give up just because. So that's saying that ignorance of law is no excuse. If you say that I do not know the law, so sorry, it's my mistake. No, I will correct myself. By the time you realize this, you will be losing the ownership to someone on the brand name. So the brand name or the logo, whatever that you have been using in your business, if you think that this is my brand name forever till I officially run this business, you will have to register the same with the Intellectual Property Rights of India. The law is very strict in terms of if someone does the registration, he takes the ownership. Even if you go and tell the government that I am the original owner, I only created this name, I only coined this tagline, I only designed this logo, you cannot go and fight with the government. Government will say first come first serve basis. Whoever comes to me, I do the registration, and the brand name or the logo is registered for a particular applicant. It's given to them. You cannot go and fight with it. Either come to me or to the person who registers. So trademark registration is something that I advise, which is not mandatory by law. Okay. But since I have been handling cases where my own clients losing the brand name to someone just because they are not aware of such provision, okay, I tend to advise whoever I come up to saying that you do the registration of your brand name if you don't want to lose it. So that's another and please ping me in case I'm.
No, I'll let you know.
Okay. The other thing I want to communicate is I come across my clients. So when I ask them, you're going to start a company, and how are you going to get orders? You say it's very easy today. I'm a good networker. Facebook is helping me. I get lots and lots of orders. Actually, I say that confidence is appreciated, but overconfidence is actually it's too much in business. Business, you cannot expect certain things by to have it happen always on its own kind of thing. It cannot be always favorable to you. So the strategic plan for sourcing more business orders. And everything, everyone is here to run the business, taking more orders and making the company grow. And all that. You cannot run a show for the reason that you don't want to take business kind of thing. How to source orders is basically a strategy that you will have to engage. You will have to define a plan. The strategic plan of sourcing more orders, for which depending on one particular strategy alone will not help you. Saying that being a Facebook, or I can engage a marketing consultants, or I can have a sales team who will take care of everything and all that. There are lots of avenues which you will have to figure out based on your business. So for every business, not always that all marketing strategies will help you. You have to engage the right strategy which is applicable for your business. And for which the networking is very important to start with, where you have to engage with the people whom you come across, understand their business and see what is the marketing strategy they adopt, which will be of much helpful to you to decide what is the right thing that you are supposed to do in your company. And another thing, I come across with entrepreneurs is.
Would it be possible to throw some more light on the TDS aspects of it? Because
TDS.
the taxation bit, if you look at taxation on the board,
Okay.
TDS is one aspect of it that's probably least understood by most people.
Okay. TDS. TDS is basically tax deducted at source. Suppose if I believe some of you would have worked as an employee in a company where from your salary the tax would have been deducted at source, and you don't have the choice with your employee to say don't deduct it. So it's checkpoints by the government on the corporate to do the TDS. When you become the employer, you are supposed to deduct tax at source on certain payouts. Like say for example, if you are paying salary to your staff, okay, and it crosses beyond a particular limit, Okay, you are supposed to deduct tax at source. And in case you don't deduct tax at source, you will be penalized by the government. Okay, and there are the penal provisions are applicable on many areas. Like if you don't deduct, there is a penalty. If you deduct but not remit, there is another penalty. If you deduct, remit, but you don't file the return in the government, there is another penalty. So likewise, so you will be punished by the government monetarily on anything which has been happening. Not doing
Now
also.
I think daily 200 bucks, isn't it?
Yes, if you don't file your return on time. See, the return, let me explain what is it. If you deduct tax at source from someone, you'll have to remit it to the government before on or before the 7th of the following term. And once in 3 months, you'll have to file a quarterly return with the government. Okay, saying that I deducted so much of amount from this person and I have remitted to the government on this day and these are the bank details. So, and this is these are details you mention on the TDS return and you file with the government. If you don't file this return with the government, for every day that you delay, I mean, if you file it in a delayed manner, suppose if you delay by 30 days, they will penalize you for 200 rupees per day. And the moment you file the return, it's automated. In a week's time, you get a notice to deliver to your email saying that this is your penalty. So government is very strict on this, and of course there are lots of people who are taking it for things like people started getting penalty notices for about 5 lakhs, 7 lakhs, 8 lakhs, and all that. So which people have been fighting with the IT department. It's too much. We never knew that such thing is there, and you are so strict about it and all that. Give us a excuse kind of thing. So which has been happening now. But for you, it's very important because if you deduct from someone's payment and remit to the government, you don't incur anything. You just deduct and remit. But if you delay it, the interest what you are going to pay is from your own pocket. Okay. So if you think that I can take my own sweet time, you are going to pay money from your own hard effort. So TDS, in what are the expenses it is applicable? Like one is salary. In case you pay salary to your employees and which goes beyond a certain limit. Limit is income tax as a slab as you must be having. Knowing that is up to 2.5 lakhs of salary income. It's a basic exemption. People don't have to pay tax. 2.5 to 5 lakhs. So somewhere there is a slab, 10%, 20%, 30%. So once you'll have to do the tax planning at the start of the year itself. Suppose in April, if you are engaging an employee, you'll have to assume that he is going to stay with you for the next 12 months, which is actually not really possible in the current scenario. So you'll have to assume that he is going to stay with you for the next 12 months. And do a tax planning. You'll have to ask him certain basic details like what are his investment details, whether he has a housing loan for which he pays interest, whether he pays any life insurance premium. There are many exemptions as applicable and available under the income tax provisions. And you'll have to seek those information, do a tax planning, and deduct the taxes from his salaries and remit to the government. This is only the salaries. Suppose if you run your business in a rented property, okay, where you take a business premises on lease. The rental money what you pay to the landlord, okay, it also attracts TDS. So you will have to deduct TDS at the rate of 10%, and you will have to remit to the government.
Can you elaborate a bit on this?
What's the limit on that?
Pardon?
What's the limit on
Yeah,
that?
if you are paying rent more than 15,000 rupees per month.
1.5.
1.8 lakhs is the ceiling. In a financial year, you will have to deduct TDS at the rate of 10%.
Every month.
Every month, yes.
So we need to issue him a certificate or something.
Of course, yes.
Even for sole proprietorship.
Yes, any business. If you are claiming rent as a business expenditure, and if you pay more than 50,000 rupees as rent per month to the landlord, which also includes rent and furniture fixtures. It's not just so, normally landlords tend to split the amount into two so that they can avoid TDS. That is also covered now. Since IT department also thinks that, I don't know, people can be smart enough to split the amount. So now rent and furniture fixtures both are covered under the.
It is slightly deviating, but if we pay by cash,
Still it's applicable.
no.
Actually,
There's no
as a
receipt.
business entity,
Right now they do
Let me be very
for
honest.
yes, as a business entity.
No, not from my
No,
end.
gentlemen, I say, as a business entity, you are not supposed to pay cash to someone beyond 20,000 rupees. In cash.
This is 15, right?
20, no, generally, cash. More than 20,000 rupees, you cannot pay to anyone if you are running a business. As a business expenditure, it will be entirely disallowed by the income tax department. You will be paying 30% on the entire amount what you pay as income tax liability to the government as penalty. Okay. So, in your case, suppose if you are paying rent of more than 15,000 rupees to your landlord as rent, you are supposed to deduct 10% as TDS, remit to the government, and once in 3 months you will have to generate Form 16E. For employees it is 16, for non-employees it is Form 16A. You will have to, so which he will be claiming when he pays income tax to the government. He will adjust this amount and he will pay the balance to the government.
So this is for the service tax that the landlord has to pay?
No, service tax is different. Service tax is if the landlord has more than 10 lakh of rupees as rental
So
income.
he's charging me service tax.
Yes.
So should I include that amount in the TDS?
No, don't
That
include.
should be-
When you calculate TDS, you should not calculate on the total. You will have to take only the rental amount what you pay to the landlord, 10% on it, deduct it from the total amount.
And add the SC back. And add the service tax.
Yeah, that's what. So on the total, you calculate you deduct this amount and pay the balance to the landlord. And once in 3 months, you will have to generate the Form 6 TDS certificate for the landlord and issue them, and which he will be adjusting against his tax liability when he pays income tax to the